Nvidia just signed a $500 billion deal, while the rest of the economy hobbles around. Good day, everyone. Welcome to the video of the day. So, Nvidia has signed one of the biggest financial deals in the corporate history. $500 billion backed by six of the biggest names on Wall Street. At the same time, jobs data is coming, and the last month global market had real hubble over whether all this AI spending will actually pay off or not. So there's a question that is AI infrastructure the one thing propping up the entire economy right now? Let's break down what actually mean. So this isn't a small announcement. It's genuine shift in how AI infrastructure gets built and paid for, and the timing right after a rough month for tech stocks tells its own story. So we'll start with what's actually got signed. On August 10, Nvidia formally announced it had signed memorandums of understanding with six major financial institutions named as Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR to mobilize more than $500 billion in third-party capital for AI infrastructure. Here's how it actually works. So these firms will independently underwrite AI infrastructure and will provide capital at attractive rates to Nvidia's customers and companies racing to build data centers. Nvidia CEO Jensen Huang put it very simply. We began by building chips. Today we are helping create a new class of productive, investable infrastructure of AI factories. In practice, this treats compute power, literally access to AI chips and data centers, as an asset class similar to how investors already treat commercial real estate or toll roads. It's collateral now, not just hardware. The second part of the discussion was that why this deal exists in the first place. So his financing push down didn't come out of nowhere. It comes right after a July swoon in global markets, where investors started openly questioning whether big tech's massive AI spending would actually pay off or not. And that concern has real numbers behind it. Big tech companies' combined AI spending is set to surpass $730 billion this year alone. Rating agencies like Moody's have specifically warned that this level of capital expenditure is starting to squeeze the free cash flow and pushing the tech giants forward with heavier debt loads. So, is this deal really Nvidia's answer to that exact worry? Instead of tech companies borrowing more themselves, bringing outside long term capital, pension funds, insurance money, private equity to fund the build out instead, it spreads the financial risk away from the tech companies' own balance sheets. Now, what is the bigger picture? Just AI versus everything else. Zoom out, and this is where the contrast really shows. Global AI infrastructure investment is expected to breach $1 trillion in 2026 alone. That's an almost unprecedented flow of capital into one specific sector. Meanwhile, on this channel, we already covered the US labor market showing real cracks, China's growth hitting a multi year low, and inflation numbers surprising in multiple countries. And broad economic indicators are at best mixed, some genuinely soft too. That contrast raises a real question. Analysts are actively debating right now this is AI infrastructure spending becoming the primary engine holding up growth and market confidence, even while other parts of the economy are visibly cooling down. Now, so this is not Nvidia's first mega deal either. This is not an isolated move too. Nvidia has separately been in talks to back up $100 billion to help OpenAI lease computing power for a massive data centers hub in Ohio, and it's already tied to broader the $500 billion target infrastructure project announced earlier this week. So what is the bigger picture? Here's where things stand. One company just helped mobilize $500 billion in financing and treating AI infrastructure like a brand new asset class for the world's biggest investors, right as the broader economic data shows the real softness elsewhere. Whether there's a sign of genuine durable strength in AI or a sign that markets are increasingly leaning on one sector to do all the heavy lifting is exactly the debate worth watching over the next few months. To conclude, we all will be watching how this financing actually gets deployed and whether other parts of the economy start catching up or are they falling further behind. If this helped you to see the bigger picture behind the AI headlines, hit the button or subscribe. Make sure to like the video, share it with your everyone like friends, family, colleagues too. Welcome to Money Brief. Let's grow together.